Have you heard about the recent changes in the 5-year investment plan for 2024? The financial world is a dynamic and ever-evolving arena, and staying up to date with the latest plans and policies is crucial for every investor. And one such significant development is the unveiling of the new 5-year investment plan for 2024. This plan is not just a document outlining possible investment strategies for the next 5 years. It's a roadmap, a compass guiding you through the tumultuous seas of the financial markets. It's a tool that can help you navigate the future, make informed decisions, and ultimately grow your wealth. Understanding such plans and their implications is a key step towards financial literacy and independence. It's not just about knowing where to put your money, but understanding the landscape, the trends, the risks, and the potential rewards. So whether you are an experienced investor or just starting your investment journey, a sound understanding of this plan can be your secret weapon in the battle of investment. Stay tuned as we delve into the specifics of this newly unveiled 5-year investment plan. The 2024 investment plan has seen some significant changes. What are these changes? Well, let's delve into that. This year's plan introduces several key revisions compared to previous years. One of the most substantial changes is the proposed plan to address the financial challenges facing Medicare. The White House is looking to raise taxes on those earning over $400,000 a year. A move that, while controversial, is aimed at extending Medicare's solvency by a quarter of a century or more. In addition to this, the plan includes a provision allowing Medicare to negotiate drug prices. This is a significant shift from previous policies, and it's aimed at reducing the financial burden on those who rely on prescription medications. This change is expected to have a considerable impact on the pharmaceutical industry, and could potentially lead to lower drug prices for consumers. Furthermore, the plan proposes capping out-of-pocket costs for certain generic drugs. This measure is designed to provide additional financial relief to those who regularly require these medications. Another notable change is the expansion of coverage for mental health treatment. This is a vital step towards addressing the growing mental health crisis and making treatment more accessible to those in need. Lastly, the plan requires Medicare to cover additional providers, broadening the range of services available to beneficiaries. This change is expected to make healthcare more accessible and comprehensive for those covered by Medicare. It's important to note that while these changes primarily focus on healthcare, they are closely intertwined with the investment landscape. The proposed tax increase on the higher income bracket, for instance, may impact investment behaviors and strategies among these individuals. These changes are expected to have a profound impact on investors and the investment landscape. So, as we move forward into the year, it's essential to keep these changes in mind and to consider how they might influence your investment decisions. Opening. How will these changes impact investors? The changes proposed in the 2024 investment plan could lead to some significant shifts in the investment landscape. For those investors with an annual income over $400,000, the proposed tax hike could potentially reduce disposable income and, by extension, investment capital. Let's talk about the short-term effects first. If the plan to allow Medicare to negotiate drug prices passes, this could negatively impact the profits of pharmaceutical companies. Investors with a significant portfolio in the pharmaceutical sector may see a dip in their returns. On the flip side, if the cap on out-of-pocket costs for certain generic drugs is enforced, generic drug companies could witness an increase in their market share, providing a potentially profitable opportunity for investors. Now, on to the long-term effects. The proposal to expand coverage for mental health treatment could open up new avenues for investment in the mental health sector. This could be a boon for investors looking to diversify their portfolios or those with a keen interest in the healthcare sector. The plan's aim to extend Medicare's solvency by 25 years or more could instill a sense of security among investors. A more robust Medicare system could lead to a healthier economy, and a healthier economy typically bodes well for investments. However, it's important to remember that these changes are just proposals at this stage. They are expected to face opposition, and their final form, if passed, may be different from what is currently proposed. Therefore, investors would do well to stay informed and be ready to adapt their strategies as the situation evolves. Closing. Investors should be prepared to adapt to these changes to maximize their returns. The investment landscape is not left untouched by these changes. What effects can we expect? The 2024 investment plan's proposed changes will undeniably send ripples through the investment landscape. A major shift we can anticipate stems from the proposed tax increase on individuals earning over $400,000 a year. This increase is likely to affect the investment behavior of high-income earners, possibly leading to a shift towards tax-efficient investing strategies. Moreover, the plan's emphasis on extending Medicare's solvency may have implications for sectors tied to healthcare. The proposal to allow Medicare to negotiate drug prices and cap out-of-pocket costs for certain generic drugs could impact the pharmaceutical industry. Companies in this space might need to adjust their pricing strategies, which could in turn affect their profitability and attractiveness to investors. The expansion of coverage for mental health treatment and inclusion of additional providers in the Medicare plan could also stimulate growth in the healthcare sector. This could result in a surge of investment in healthcare-related industries, such as biotechnology, healthcare technology, and services. Furthermore, the proposed changes could have a broader impact on the economy. The increase in taxes for high-income earners could lead to increased government revenue, potentially driving economic growth. This growth could benefit a wide range of sectors, thus affecting the investment landscape more generally. However, it's crucial to note that these changes aren't set in stone. They're expected to face opposition in the Republican-controlled House, which could lead to modifications in the final plan. Investors, therefore, need to keep a close eye on the political landscape and be prepared to adjust their strategies accordingly. The investment landscape is set to undergo a transformation with these new changes. Scene script. Change is the only constant. How can one adapt to these changes? The landscape of investment is shifting, and it's essential to stay ahead, to not only survive, but thrive in these changing times. Let's dive into some strategies that can help investors adapt to these changes. Firstly, diversification is key. With changes in Medicare and potential tax hikes on the horizon, it's prudent to have a broad investment portfolio. Consider spreading your investments across different asset classes like stocks, bonds, real estate, and even alternative investments. This way, even if one sector faces a downturn, others may offset the losses. Secondly, stay informed. Knowledge is power, especially in the world of investment. Keep abreast of the latest news and policy changes. Understanding the implications of these changes on your investments allows you to make informed decisions. Thirdly, consider long-term investments. The proposed changes aim to extend Medicare's solvency by 25 years or more. Long-term investments like index funds or bonds can be a smart move to capitalize on this. Next, revise your risk tolerance. Changes in the investment landscape might necessitate a shift in your risk-taking capacity. Consider seeking the advice of a financial advisor to help you assess and adjust your risk profile. Lastly, and perhaps most importantly, don't panic. Change can be unsettling, but it's a natural part of the investment world. Keep a cool head, be patient, and remember that investment is a long-term game. Change doesn't have to be a scary word. By diversifying your portfolio, staying informed, considering long-term investments, revising your risk tolerance, and remaining calm amidst the storm, you can navigate these changes successfully. With the right strategies, these changes can be turned into opportunities for growth. So embrace the change, adapt, and let your investments flourish in this new landscape. To sum up, the changes in the 5-year investment plan for 2024 present both challenges and opportunities. The plan's focus on addressing the financial challenges of Medicare through increased taxes on high-income earners and price negotiations for drugs, for instance, may affect investment strategies for those in this income bracket. The proposal to cap out-of-pocket costs for certain generic drugs and expand coverage for mental health treatment could potentially lead to increased demand in these sectors, offering new avenues for investment. Moreover, the inclusion of additional providers in Medicare coverage may stimulate growth in the healthcare sector. However, the plan's potential opposition in the Republican-controlled House adds an element of uncertainty. This underlines the importance of staying informed about legislative developments that can impact the investment landscape. The key takeaway from our discussion is the need for adaptability. As the investment landscape evolves, so too must our strategies. Investors need to stay informed and adaptable to navigate these changes successfully.